On November 8th, Angelenos voted yes to Measure ULA, also known as the mansion tax. Of course, tax the rich. But who really pays? And how will this impact Los Angeles? Hello, my name is Dennis Maynard. I am a real estate broker in Los Angeles. Please don't forget to like, subscribe, and follow. Government's view of the economy could be summed up in a few short phrases. If it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. President Reagan was correct in his assessment. Every time there is a real estate transaction in Los Angeles, there are taxes levied by the county and the city. There is a fee of $5.60 per thousand or $560 per every 100,000. The tax goes to the general fund for the city and the county. As of November 8th, voters passed a measure to tax the rich. This includes commercial real estate, not just mansions as the measure so aptly is named. The measure includes a 4% tax on valuations from 5 to 10 million and a 5.5% tax on valuations over 10 million. Los Angeles politicians also sneakily exempted certain qualified housing organizations who have shown a history of developing affordable housing. Meaning, if you wanted to get into the business of developing affordable housing, you're SOL. The claim is that this will raise up to $1.1 billion annually, with 92% going towards affordable housing. If it's anything like Measure JJJ disaster, most of the funds will get soaked up in the city and county government bureaucracy. Who's going to pay for this tax? Well, most would say the rich, but that's just not the truth. This will curtail investment in commercial real estate, curtail higher turnover of real estate that could be potentially developed, and raise asking prices. After all, if you were selling something and you could raise your price, you would. So who pays? The renters and the taxpayers. The renters are going to face higher rents in the long run. And the taxpayer, as they are subsidizing government housing, which means they'll need more taxes to cover the bill. But are you aware that development costs are 30% higher in California than other parts of the country due to regulation, lawsuits, political favors, long planning timelines by the government? Unfortunately, the voters have had another one pulled over them. Sneaky politicians at it again when all they need to do is make it easier to build more housing. This measure takes effect in April of 2023. If you're thinking about buying, selling, or developing real estate, please call, text, or email. I'd be happy to help.